Hello, good evening. Bringing you a review of the FTSE 100 for the trading session Thursday, the 24th of December 2020. Wishing everybody happy holidays over the new year and obviously going into Christmas. So wishing you and everybody the best, and hopefully you spend that with family at home. Unfortunately, if you can't meet family or meet obviously elderly individuals, then my condolences. But we do have the blessing of technology now, so you've got Zoom, although obviously it's still not the same, but given the condition that the virus certainly has started to mutate, we've already got 2 mutations now, one in the UK, one in South Africa, and it certainly isn't looking good going forward. And whether or not these vaccines will be able to obviously counter that will be interesting to see. Okay, bringing you a review of the FTSE, so please be sure to visit my site, etc. I think you've already heard that many times now. Let's move straight into the analysis, given the fact that it's been a few days. I've not really done any videos, and the reason why is because we've had the same scenario playing over and over again. Nothing really to report, given the fact that obviously we've had multiple bearish arguments for the FTSE. But having said that, we've had quite a remarkable comeback until the daily chart or daily candle on the FTSE gets taken out or negated, which is at 6,530. Bias still remains bearish. So basically today, and really the last few days, basically we've had this second COVID strain mutation. Obviously everybody blocking their routes obviously into and out of the UK, and therefore the UK now has become the plague island. I think that's what a lot of people are calling it now. And which obviously doesn't bode well in terms of economic growth. Now today we had some very dim figures here. We've had UK car production falls, UK firms collapses, of profits collapse more than a fifth basically, and a lot of the bearish arguments in terms of increased lockdown measures as well, given the fact that tier 4 in London obviously risk off, and that's all been negated by this so-called obviously a deal potentially being struck with the European Union, and that's what's triggered a obviously short squeeze on the FTSE 100. Let's just quickly go to the 10-minute chart, and you can certainly see that clearly. The pivot low we've seen at 6,330, and ever since then the market is just literally short squeezed higher. We've got the unfilled gap obviously which was triggered going into the obviously Friday evening close, and obviously going into Monday. And looks like we are going to close this so-called COVID mutation gap and the tier 4 obviously lockdown in London, given the rapid rise in the deaths. Now I think that the latest stats today, we had almost 700 people dead today, so it certainly doesn't bode well. And obviously the infection rates are rising as well, with London, which is the key financial capital, where the taxes, and majority of taxes are generated from there, and obviously the growth etc. that's linked towards a London-centric UK. Okay, in terms of the market then, continue 60-minute chart, give you an insight here. We have retraced into previous support equals resistance and fib 61% retracement. Again, if we continue to thrust high in the back of this European Union news. Having said that though, a lot of that news was already baked into a large extent in terms of European Union, so bear that in mind, given the fact that the FTSE has rallied quite considerably. Although one would argue it was based on vaccines, but another argument could be said that was based on the European Union potentially getting a deal. What the reaction will be, not many individuals know. Okay, all we can do is basically react and not predict. That's basically the trader's mindset. Okay, in terms of the 60-minute chart then, okay, so you've got previous support equals resistance. Next one is at 6,520 if we continue to thrust higher. And again, I've indicated the daily chart or upper body resistance level on that red candle, which was triggered on the back of the Monday's decline, okay, at the back of tier 4 London lockdown. Provided we remain below that upper body, which is around the 6,530, bias still remains bearish. If we start to break through that and negate that on the back of this European Union deal, and the market start to short squeeze quite sharply, okay, given the fact that a lot of the uncertainty is removed, then you are going to see 6,600 potentially. Okay, there is a resistance here as well. Previous support equals resistance around the 6,546. The next zone is 6,600, and then the ultimate level is 6,630. Now bear in mind the fact that US markets certainly are trading very, very bullish, and again US equities certainly do tend to dictate sentiment and movement in the markets as well, so just keep that into consideration. Now let's quickly look at the rest of the European indices. In terms of the FTSE, like I said, again, COVID mutation, the ports flights being shut down into and out of UK. Again, all that is negative growth, and therefore one would argue that the FTSE is the weakest link and therefore is a sick man of Europe. Now, previously the Ottoman Empire was renowned and was certainly verbally abused as being the sick man of Europe. Unfortunately, now it's the UK, it's our country, I'm afraid. Okay, either way, that's the scenario at present in terms of the FTSE. Now, in terms of the European indices, they've certainly obviously fared very well, almost on the verge of closing their gaps as well. Let's just have a look here on the DAX. DAX obviously in the back of the uncertainty in the Eurozone and obviously the mutation and obviously extensive lockdowns. We did get a massive gap down to 13,000. We've recovered almost 600 pips since then. So again, a lot of the bullish news certainly has been almost baked in. As you can see here, European indices are quicker to close the gap. So back on the back of that Monday gap lower and obviously risk aversion. In terms of the French CAC, it's already closed the gap. Okay, impressive. French CAC certainly seems to be doing very well these days. Now, again, how are you going to interpret that and obviously forecast or explain the rally on the French CAC? It closed the gap and then obviously ever since then it's just rallied. Very, very impressive. Very, very impressive. The pivot high obviously being 5617 and obviously we've already closed the gap today. So gap fill resistance to the French CAC, so keep that in mind. In terms of Euro stocks, again, this is another index that really does baffle me. I mean, as you can see here, I'll close the gap today at 3545. Very, very impressive strength on the Euro Stocks 50, as you can see here. Gap lower, and it certainly has closed the gap from 3420 at 3540. So very impressive. We are into that fib 75% on the Euro Stock. So again, bear that in mind. Do we actually push to new highs in the back of increased lockdowns and fear of mutation? Now, the other question as well that needs to be asked, and again, it'll be interesting to see. Okay, is basically the actual mutations. Will these vaccines be able to counter that? Okay, that's the question that a lot of individuals will be asking. And given the fact that the markets are just rallying back and closing the gaps, it certainly seems that they've already got the answer. So again, impressive thrust. I certainly, for one, didn't expect that thrust to close. In terms of the markets, I certainly still expect the FTSE to remain below 6530, but that was on the basis, obviously, the fact that COVID strain, mutation, London Tier 4, obviously potential further lockdowns for the rest of the UK, infections rising, deaths rising, but this European Union deal potentially does throw a big curveball and could certainly trigger a massive short squeeze. So again, my stop loss is in at 6530, if I can recollect. Yep, my stop loss is actually in at 6530. So if that gets taken out, I'll have to reassess the situation. But again, a key fundamental variable certainly has changed, and the daily chart on the FTSE could certainly, in terms of daily candle on the FTSE, could certainly get taken out, and we potentially could break above 6600 in the back of obviously vaccine euphoria again, provided the vaccines can counter the mutations. That's the question. Okay, that'll be the key. Can the vaccines counter the mutations? If they can, then obviously that then reignites the vaccine euphoria rally, and given the fact that European Union potential deal is being nailed out again, that certainly takes away a lot of uncertainty, and the markets could certainly rally in the back of that as well. And certainly a scenario of 6,800, 7,000 certainly could be very, very plausible. Okay, either or. It's the market that will dictate, and obviously I'll be reacting accordingly. But it's interesting to see a lot of the European markets are into gap fill now. Do they hold those gaps, or do they continue to push or thrust higher? That'll be interesting to see. Okay, wish you the best. Be sure to obviously follow me on Twitter, which is trader_adil, and obviously be sure to visit my site to gain an insight into market analysis. Goodbye now.